Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that China is back working after their spring break. But Chinese trade started out 2016 on a weak note, as January exports declined far more than expected, down 6.6% in the face of weak demand and slower production ahead of the Lunar New Year holiday. But imports also fell, down even more at 14% lower. The net result was a sharp rise in their trade surplus, up to $63.3 billion for the month. The holiday break was not a good time for real estate sales in Shanghai either. They fell 94%. The reopening of their share market saw modest losses, which is somewhat surprising given the trade data. The currency was fixed modestly higher again in a continuing effort to thwart those trying to short it. And China's bad loans rose to their highest level in 10 years in December. In Japan, there was a disappointing end to 2015, with GDP falling slightly in the fourth quarter. For the year, Japan recorded economic growth of 1.5%, even after the fourth quarter decline. What was especially disappointing was that wages fell, but profits rose, showing that Abenomics is not really on track to deliver anything meaningful. Consumers are understandably reluctant to spend. Their recent and sudden shift in negative interest rates seems unlikely to be enough to do anything meaningful either. And the ECB has tried to calm markets overnight after the recent sharp falls in bank share prices. Mario Draghi said he is ready to ease policy further in March, and he's highlighted risks from financial market volatility, the global slowdown in growth, and low oil prices. He has also defended central bank efforts to tackle low inflation, reinforcing the importance of their core mandate. And the situation in Brazil is going from bad to worse. Bankruptcies are on the rise there, and Fitch has declared their commercial economy is in a credit crisis. Wall Street is on holiday today. It's President's Day, with the benchmark US Treasury 10-year yield unchanged at 1.75%. Markets are trading commodities, however, and the US oil price has risen, now at just under $30 a barrel, while Brent is just over $33 a barrel. The gold price fell sharply today to $1,205 an ounce. That's down more than $30 an ounce. New Zealand dollar is still holding. It is still at 66.5 US cents, 93.2 Aussie cents, but higher against both the yen and the euro, which is now at 59.7 euro cents. The TWI will start today at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.